Myles Zyblock of RBC Capital Markets now joining us as well. Myles, let's bring you into our discussion. Actually, let's start with financials because Julie was just breaking down that call from Dick Beauvais. Where do you stand when it comes to the financial stocks in particular?
You know, the financials to me, if you look back over big historic cycles, I think that these guys are going to be more about trading vehicles than trending vehicles. The leverage in the credit system is still there. If you look historically, bank lending as a percentage of GDP is still very high. So I think there's still a fundamental excess that has to be worked off in the financials. I'm not saying that they're expensive at all. They're actually, on the lowest side of the valuation range, at least over the last 30 years. But like I say, there's probably going to be some fundamental headwinds here for these guys going forward.
You know, I thought it was interesting that Dick Beauvais said the balance sheets are showing improvement. And I always think of Jeff Sott from Raymond James saying he can't read these balance sheets and doesn't believe that anyone really can. That's really been the problem for banks. I mean, do you trust their balance sheets? Do you think that the assets are being valued properly?
Well, I mean, that's very difficult. I agree that there's a lot of uncertainty around the banks, the financials in general. If you just look at their activity, there's a strong signal in the dividend cuts. Some of them, so obviously some banks have been forced to cut dividends over time, but there is a general sense towards lower dividends. And historically, that's been a pretty poor signal for prospective performance and prospective fundamentals for the sector.
You know, Myles, earlier we were kind of talking a bunch about the job report. Maybe at this point, investors are starting to kind of just mark time waiting for that number. Always a closely watched release. What are you expecting, and how might the market react in your view?
Well, I think this is going to be a very confusing Friday report. We have a weather-related issue that's overhanging the report. Needless to say, if you look back at all the leading indicators, it can sort of see through this distortion, whether it's, temporary employment, whether it's the ISM employment sub-indexes. We're on the cusp of organic job creation, and I think markets will have to, or will begin to start looking through this turbulence towards jobs being created over the next several months.
Myles, we continue to kind of bring this up every day, but again, we've got some more M&A activity going on here. That's a strong sign to you in terms of the market recovery, the equity market recovery?
I think it's really a reflection of a few things. It's a reflection of, profits being generated again, cash flow being generated, capital costs have come down, and confidence at the corporate levels improved just a little bit here. So I think, this is very, very sort of natural part of the cycle. We're seeing some M&A activity in areas where there needs to be capacity rationalized or where the shelves are bare, like they mentioned in healthcare. So I think this is a good part of the cycle for M&A.
I wonder what you think about, Myles, the sort of bad feelings about the markets. I mean, a lot of people thought February was a rough one for indexes, but for the most domestic indexes here in the U.S., we saw gains of about 3%. I mean, has the sort of concern really turned bearish here if you look at market sentiment?
Well, I think what we're seeing over the last few weeks is a continuation from early January when it first started, where we got concerned about the Chinese tightening and then about the Obama actions in the bank with the TARP tax, and on, and now we're worried about Europe, and we have something to look forward, or not look forward to, but to worry about with the Fed pulling back from its MBS purchase program at the end of March. I think these are the near-term event risks for the market. We're trying to absorb them, and the end result is a lot of uncertainty in a choppy sideways market.
Myles, when you think about strategy in this environment, I hear from a lot of people that expect a lot of volatility. There's still some concerns about the economic outlook. Some people are once again talking about the potential for a double dip. I mean, how do you play this?
What we did is a couple days ago, we recommended to our institutional clients to take a little bit of money off the table. This is the first time we've said this since April, and it's really because of these budding event risks that we see. But ultimately, I agree that we're looking for a positive resolution to this churning action. We see, S&P earnings are likely to be up north of 20%, probably 25% in 2010. And if you look back in time, it's pretty rare to see very strong earnings gains in a down market. I mean, it can always happen, of course, but the betting odds are that we're going to see a positive resolution to this. We're seeing the top line come through now. It's not just about cost cutting, although cost cutting is still an important part of the story. But we're getting the top line coming through.
All right. I mean, you really feel that with conviction because, I mean, companies, you see a lot of companies still holding back on hiring at this point. They're really kind of still watching that cost equation very closely.
Oh, and I think they will for some time. Like I said, it's all connected to the uncertainty around the economic environment. But if you just look at the macro variables themselves, the economy is starting to improve, and I think with that, confidence will return. I think ultimately what we really do need to see to stabilize people's perceptions about the future is some job creation.
I wonder, you do have an EPS estimate of $72, Myles, which isn't exactly astronomically high. Do you want to ratchet that up?
Actually, $76 for 2010.
There you go. All right, let's get more. Let's get
something that Matt and I spoke about with Leo Grahowski earlier, and that's kind of the questions out there regarding what the policy changes come out of Washington, whether it's tax policy, new strains on corporations. Myles, safe to say that you sound somewhat upbeat here about the market, but until those get resolved, it's going to be hard to see companies make any significant moves, be more aggressive perhaps in this environment.
Yeah, I mean, there's definitely some regulatory and policy overhang to the market, and I think we have to look out to 2011 at some point for some of these issues to be resolved. But the traders will always tell you, the markets try to climb a wall of worry on incremental information, and like I say, usually what trumps worries about the politics are the economic cycles, and I think the economic cycle is still continuing to improve.
All right, we got to leave it there. Matt, thank you so much. Myles, excuse me. Thank you so much. I was thinking of you. Myles Zyblock of RBC joining us, and then also